All right. Welcome, everybody, to a new edition of the late evenings with David, but not with David over Discord. Let me just move around the waiting screen. Also, minimize this. There we go. Hello, everybody. Hope you have an amazing day today. I'm Vlad. Let me just pop up the um, Discord link in case you guys want to join the conversation as well. It's free to join. You just have to join the Discord server. Uh, Here, there you go, discord.gg/davidtech. Scroll a little bit. You can find the voice chat. Join directly. It's free to join. And if you have any questions whatsoever about David Tech, more than happy to make the conversation bigger and longer. Let me just check if you guys can see my screen. All good. So let's move forward with the presentation. First and foremost, the disclaimer, guys, you are 100% reliable for your financial decisions. We are pretty much trying to debunk the markets with the tools available. And if there are none available, we are pretty much building them, like strategies, tests, and everything around algo trading. If you're getting approached by somebody claiming to be a staff member or anything like that, that's 100% not us. We're never going to ask you for money or to invest into some kind of third party platform or anything like that. If you wish to speak to a staff member inside the Discord server, into the general chat, just ask for somebody for some help and you're going to be attended as soon as possible. If you have any questions, more than happy to answer. Just feel free to interrupt or write them in the chat, either the live stream chat or inside the Discord. If you mouse over the voice chat name, there is a small chat bubble. You just click on it and you can write your question. Also, I would like to salute everybody from X and YouTube, the 10 people already. Welcome everybody to the stream. In case you are new, feel free to join the Discord server. So, today's agenda, today will be 4th of May. And today's agenda is pretty much filled with our friend Yuli, which has come up with a new indicator, which I'm not going to spoil it too much, but I think it's one of the better ones, like the ones from 2 weeks ago and 3 weeks ago and something like that. The one from last week, it was a little bit average, but still great. We managed to find something that's good as a starting point, but this one I believe is a lot better. I'm going to just leave it as it is, just a lot better. And of course, I've got an early peek to it, and I've managed to create a David strategy out of it with the boilerplate that everybody within David is pretty much familiar with. And of course, some more updates. If you have any questions, feel free to drop them in the chat. So, starting with the man of the hour, Yuli, my friend, which is an electrical engineer teacher here in the Eastern EU. He's been teaching electrical engineering, and he's been a member of our David community in the past couple of months. He's been coding indicators. We are pretty much at the 17th one, if I'm not mistaken, or even 18th. Yuli, can you answer me?
Something like that. Almost 20, yes, almost 20.
Rounding up. Awesome.
Okay, I will share my screen. Tell me if you can see it.
Just one moment. Let me just grab the screen and move the attention to you, my friend. There we go. Also, very important. How are you doing, my friend?
I'm doing well, excited for this week. Quite a little bit tired because of the last one, but we can manage this. Hi, everyone, also. So, very glad to see you again here for another session on presenting a new indicator. Before I start, I want to say that I made a big mistake with Vlad learning him the easy mode. So it seems he's now used to it. And when we have an indicator that needs to change some inputs, he's saying not so good. But yeah, you know how it is. You have to, I don't know, to meet some bad things in life to appreciate the good ones. So, yeah, based on the last week, Vlad, I guess this one would be better for you.
Awesome. I'm so more cannot wait to view the presentation.
Okay, so as you know, guys, on every week we are trying to introduce a new indicator with an in-depth understanding based on the presentation we have made for every Monday. So since it is also recorded, I guess in time when you'll put your hands on the indicator, you can maybe go back to these videos and get a better understanding on how it works. And also, as you know, by Wednesday, we are turning that indicator into a strategy. So again, there you can see how to tune it, how it looks, also what is working, what kind of market is working on that indicator, and so on. So yeah, keep in mind this and give us a feedback when you are having some results to say so. So for today, we are introducing a new indicator, the roll spread liquidity bias. This indicator is like a deterministic trend quality and liquidity stress score engine. It does not attempt to estimate directional strength from price alone. Instead, it blends directional efficiency, return sign consistency, roll style friction, volatility instability, and shock memory into one bounded score. Then routes that score through adaptive thresholds, hysteresis, cooldown, and of course confirmed only signal publication. So the core idea, rather than asking a simple moving average crossover question, this indicator asks two things at the same time. Is recent price travel directionally efficient? And is that move happening in a healthy or stress liquidity regime? Efficient directional movement is rewarded, while negative return autocovariance, fast versus slow volatility imbalance, and the after effects of outsized shocks reduce confidence. The result is a signed score that can remain bullish or bearish, move back toward neutral in noisy conditions, and also require stricter confirmation whenever inferred liquidity quality alternate. To achieve this, we have combined different objectives. So firstly, we have a directional efficiency measure based on signed log price travel relative to recent absolute return travel. Next, we have a directional consistency term based on the average sign of recent returns across the core window. After, a roll style friction proxy derived from negative lag minus one return covariance rather than coated bid-ask data. We also have a volatility instability term, which penalizes environments where short-term return volatility rises above its slower baseline. A shock memory process, which remembers outsized return events and temporarily dampens conviction after them. Next, we have an adaptive normalization and dynamic thresholding. So the same row move is interpreted in the context of its recent regime. And in the end, the hysteresis, cooldown, and one bar shifted final signals. So triggers are confirmed, declustered, and deterministic. The logic flow behind this indicator, as you are used to, firstly, we always do the metric preparation. So the script begins with log returns and log price over the core window, where it estimates average absolute return travel, then compares that path length with the signed log price displacement across the same window. This creates like a directional efficiency, which answers whether price moved cleanly in one direction or merely churned around while covering distance. After that, we have our directional quality construction. So the indicator adds a second directional term called directional consistency by averaging the sign of recent returns. It then combines those two terms, so the directional efficiency and the directional consistency, with a 70 to 30 weighting. This matters because a move can have like a decent net travel but still be internally noisy. So the return sign term pushes the script to care about whether the bars themselves were persistently aligned. After that, the third step is the liquidity and shock conditioning. So the code next estimates roll style friction from negative lagged return covariance, normalizes that friction by fast return volatility, and compares the result against its slower regime baseline. In parallel, it compares fast and slow volatility directly to measure instability. Those two stress channels are blended into a bounded stress score, which becomes a quality gate. Then a separate shock memory state is updated whenever the current return exceeds a configurable z-score threshold relative to fast volatility. After that, we have our score construction. So after directional quality has been scaled by both the liquidity quality gate and the shock gate, the result is normalized by a slow EMA of its own absolute value. A floor prevents the denominator from collapsing in very quiet periods. The normalized unit is then clamped, compressed into a bounded mapping, and smoothed with an EMEA. Finally, the script rescales that bounded core metric into a score centered on zero. And the signal logic, of course, where we have the adaptive trigger layer and the signal logic. So the score is filtered by dead zone compared with the dynamic entry threshold and paired with a lower release threshold for hysteresis. Thresholds widen when liquidity quality weakens or when shock memory is active. And of course, signals must hold beyond threshold for the required number of bars, must still be sloping in the trade direction, and must pass cooldown plus latching logic. You'll see in a second on the first look of this indicator what we have tried to do with this kind of logic. The math behind, or at least the most relevant parts of the indicator regarding the technical implementation. So first we have the directional efficiency. This is basically a straightness measure. A clean trend has high efficiency. So a whipsaw market has low efficiency. If price rose almost continuously, then net travel and total travel are similar. So the ratio is like near +1. If price fell cleanly, the ratio is near -1. So if price chopped around, total travel is large, but net travel is small, so the ratio moves toward zero. This part is not measuring speed, but it is measuring how much friction and backtrading occurred inside the move. After that, we have the roll style friction. So this is inspired by the role model idea that negative lag -1 return covariance can reflect bid-ask bounce or trading friction. So if returns tend to alternate up, down, and so on, the covariance between the actual return price and the previous one becomes negative. That is often a sign that price action is less smooth and more noisy. So instead of using coded spread data, the script infers friction from return behavior itself, taking the square root of that result, brings the friction term back toward the same scale as volatility, so it can later be normalized more sensibly. And in the end, of course, the classification and signal logic. So first, the script creates a directional conviction score from trend quality, liquidity stress, and shock memory. Then the signal layer decides whether that score is strong enough, persistent enough, and clean enough to publish a buy or sell signal. So signal need all of the following: enough warm-up history, not inside the dead zone, threshold confirmation, correct score slope, cooldown clearance, and side not already latched. And of course, in the end, just to get familiar with this indicator, we have a first look on the Tradingview platform. So, of course, the most important one is the score line. This is the main plot. Is the signed score after gating, normalization, compression, and smoothing. Positive values indicate bullish directional quality in a relatively healthy environment, while negative values indicate bearish directional quality. And of course, values near zero indicate weak or discontinued structure. Beside that, we have the dead zone and trigger bands. The script plots zero, positive and negative dead zone guides. And additional to that, we have a positive and negative entry thresholds. Um, so the entry threshold and release threshold form like a two-level trigger system. This is quite new for what we have built so far. As you know, from the indicators in the past, we have encountered this adaptive threshold, which, as we saw, it gave us some very good results because it gets closer to, let's say, reality or to the actual price. So, based on that, we take that to the next level, and now we have a two-level trigger system. So the entry threshold decides when the score is strong enough to qualify for a new signal, while the release threshold decides when that side has weakened enough to be reset and to allow to fire again later. The neutral noise sits near zero, and we can see the white band around it. And of course, in the end, the buy and sell markers and alerts. So we have green and red triangles for buy sell signals. So yeah, this is a first look on this indicator. It looks quite promising, and the two-level trigger system, along with the hysteresis logic, it should be giving us some good results on the strategy. So yeah, I'm expecting some promising results on Wednesday when we are trying to turn this indicator into a simple take profit stop loss strategy, just to see how the indicator performs by itself. So yeah, thank you everyone. If you have any questions, don't hesitate to ask them. Uh, and yeah, we are looking forward to see you again Wednesday to see the results and how to tune this indicator. Thank you.
Awesome job, Yuli. Thank you very much for the presentation. Let me
Thank
just
you.
move my screen and also set up everything in order to take over, because I also have something to show about this indicator. But again, most important, thank you very much, Yuli, for the work. It's an amazing indicator in my point of view. So let me just grab my
So now is the time to say so. You are
Exactly.
coming here to say that I'm not so good like the last one, better than the last two of them.
The judging panel, right?
Yes, yes. I have to pass Vlad to then ask for trading you moderators.
Exactly. It's like a judging one after another. You have to take some steps, to unlock a new level and so on.
Exactly. So just for everyone to understand what Vlad is trying to do after the presentation of the indicator, so he basically have the indicator added to the boilerplate, and based on standard values of the inputs, so he's not changing anything. He's trying different time frames and different markets to see what the first results
First
he can
experience.
yes, like a first experience. So it's quite interesting that you have come with this idea, and also I think it's nice to see every week that some indicators are working on different markets, on different time frames, also on the maybe on the most favorite of the community and so on. So yeah, it's great to have this first look on the indicator. Okay, thank you, Vlad.
Thank you for the introduction. Exactly like Yuli said, it's pretty much uh, a method on trying the core logic behind the indicator. So I just put some very standard, like, I don't know, 2% stop loss or something like that. It's risk to reward based on the ATR. So it's something that it's not like some kind of extreme settings. It's just out of the box. It's more about trying the concept behind the indicator rather than fine tuning the indicator, finding and squeezing some of the more profits and anything like that. And as you guys can see, we're pretty much on the 1000 units of Pepe over 45 minutes chart, and we already have something promising. We do have 100% profits, maximum drawdown around 20%, 460 trades, so there is a lot of room for improvement. Profit factor 1.2, the win rate would be 47%. I don't think we are beating the buy to hold just because we are pretty much very close actually. So, I mean, close by 100 and something, but still, because of course it's 1000 units of Pepe over 2 years and a couple of months. We all know the 2024 or something on the evolution of Pepe over 2024 and some of the other altcoins as well. But still, overall, looks pretty good in my opinion. We still have a lot of room for improvement. I also have ADH to check out. I haven't noted the time frame. It's all about the coin itself, but still, like 45 minutes. Again, something promising. It's not looking so great here at the beginning, but this could be very easily filtered because at the moment we do have 380 trades. So again, should be very, very easy. What's next? We do have Mantle next. Let's check very quickly as well. I have a couple of others to check. Mantle, I mean, looking great. 90% profits, 20% maximum drawdowns, 30, 200, 300, 300 or so trades, 46% win rate, and profit factor 1.2. Equity curve looks pretty good. I mean, with some fine tuning, I mean, cutting like, I don't know, 50 or 60 trades, we could have something which is pretty much amazing.
Sorry, Vlad, to interrupt you. Fine tuning, you mean firstly the road tuning?
Oh, yeah. Exactly. First the big tuning and then the fine tuning. Indeed. Excuse me on that one. So yeah, we could optimize it even better to have a lot of better results, which are more about the coin and also the time frame rather than making like universally valid like it is at the moment. Let me check another pair as well. So we are at the moment at Mantle. We also have Dodge as well. Some of them are better than the others, but you do get the raw idea. Let me try to find the time frame as well. here, like this one, again, it's maybe the least appealing than the previous ones, but again, a beginner would be more than happy to have this, not this, as a starting point, I suppose. Yeah, I suppose the this one was the better one. So we are on Doge. Let me check another one, Sui as well. I believe one was a good one as well. Let me search through the time frames. I mean, a lot of room for improvement. There we go. Some which is looking very, very good as well. We'll also have SHIB as well. Let me check very quickly. There we go. I mean, good enough again for a starting point. There are some more actually. We do have Link, Ina, and also AVAX. So the last three of them as well. Like the previous ones, so maybe not the very best ones, but still, the concept behind it, I suppose it's working. So that's all that we could ask for it. Let me check Ina as well. I believe Ina was not of the greatest. I mean, yeah, we still have a higher profit than the maximum drawdown. So it's a good enough, I suppose. We're also beating the bank to hold by quite a lot. Let me check AVAX as well. And that's pretty much it with the indicator for today. There we go. From the first try. And yeah, that's pretty much it, guys, with the RSLB indicator that Yuli has baked for us for today. In my opinion, I mean, I'm actually quite excited for Wednesday to see Yuli's results and also mine. I'll definitely have some base settings to start with. And, like, for example, this one, I mean, I could even cut the total trades by half into try to get a better profit, try to reduce the maximum drawdown, try to get a movement reduction, for example, like this huge drawdown from here. So these are all just very, very good base settings in order to start to optimize and, I suppose, aim for the stars. All right, let me check if there is actually any questions for now.
Amazing work. I mean, a
Thank
lot
you.
of
But
trades, some good results. Yeah, it looks promising for sure. We should note that last week I have a win on Wednesday, but yeah, it's quite hard to compete with boilerplate to say so. So for everyone, maybe some of you didn't so like every indicator that we have built. So some of them are good by themselves to say so, and the other can be really enhanced with the boilerplate, which is amazing. And of course, since they are just an indicator, they can be improved along with other indicators or a mix of them. But yeah, looks promising.
exactly like you said, like there is nothing added to the boilerplate. I mean, the potential is basically to the stars, and yeah, an amazing indicator. I don't have any other words. Just gonna be interesting to find some focused setups rather than universally valid or however you wish to call them, base settings, whatever. Concept proving, that's also a bunch of couple of nice words as well. Let me see if there is any question. Wow, looks good. A lot of work done by guys. Nice. Yeah, 99.99%. It's also just Yuli. He's the one that's baking this for us every Monday. And we have something to do over Wednesday as well, making this indicator a strategy, or on my end, making like a focus setup rather than showing some base settings. And yeah, Yuli, would you like to share a little bit on how you actually manage your workflow? Like, what's the
Oh,
steps
this is quite
in a couple of
interesting.
words?
So yeah, since we have some time, uh, I guess it started with a list that Vlad made. So he has like a research on some indicators that may not be already in TradingView, or that maybe would be interesting to have. Based on that list, I started my own research. in different directions. So the one of them was some engineering indicators, so applying metrics, algorithms, methods from electrical engineering into the trading view. We had some of them, and we are still adding them to the new indicators. For example, the hysteresis logic, which comes from engineering. So yeah, beside that, another direction, another interesting direction was to check what maybe other indicators exist already in the market, to say so, but they are not yet implemented in TradingView. Of course, it was some kind of hard work to see what it can work basically in the TradingView platform, since it has like a lot of constraints, performance issues, and so on. So yeah, it was like really hard work to do the research, to filter the best indicators, and also to fulfill like a portfolio. So as I said, we are trying to make like a story. We don't know yet when it will be finished, but after that, we should have like a portfolio with different types of indicators. Maybe we'll make like a list how to combine them, or maybe what other indicators can enhance the ones that we have, maybe some strategies and so on. So yeah, I think it will come a time when we should stop, like okay, this was the first session of indicators, and maybe try to see how we can work with them, and how we can take our money back, to say so. Based on these
Exactly.
promising results, I mean, it comes a time when we have to really uh, hard test them, and yeah, put them to work.
Exactly. And maybe we could try it first the NNFX model, like getting like a leading indicator, making sure that we do have a couple of them for conference and also like a volume one. And yeah, basically do what David did a couple of years ago.
Yeah, yeah, and also some of the indicators came from you guys. I mean, from the community. There were some, let's say, questions or events that happened in time, and raises us the idea of what we can do to solve that. So, for example, I think it was a time Algo and the others talk about the December event, which was not so great for most of you. So yeah, it was like the inspiration for me to work on the enhanced Markov indicator, which I think it gave us some good results. So yeah, a lot of ideas are coming from you, also trying to answer the community concerns, to say so. So yeah, it's interesting to build this portfolio of, as far as I understood from Vlad and David, it seems that I am turning these indicators to a new level, to say so. So yeah, it's interesting to have this new approach, this engineering approach, and to see that it really gives us good results.
Yeah, I mean, uh, we're just at the discovery
Yeah, for
stage,
sure, for sure,
and
for sure.
then we got to fuse them and also create, like, for example, strategies which we can uh, create vaults, I suppose, and try to build some kind of vaults, I suppose, that people can just, you can pretty much trade them like they trade, for example, the David strategies, and come up with some packages of these exact concepts that are actually proven in real life engineering and so on. I mean,
Yeah,
packages in like
exactly.
vaults which you can trade directly. which, in my opinion, like having, like David said, I'm trying to diversification. There you go. So if you're going
Yeah.
to diversify your portfolio with not even different strategies, but different concepts, like strategies coming from a whole different field, like for example, economics and engineering, you are subject to maybe try to protect yourself as much as possible, because just in case the ones that are using, for example, the very basic trading view indicators, as I've pretty much explained earlier and I've been explaining, 99% of the indicators are the same, or 1% which are pretty much rebranded. Instead of a line, it's a box or whatever, it's a level or a dot or whatever, and so on. Or it's that particular line but with like levels of limits, like the minimum and low, and it goes like in turning into a point and so on. And having like a whole different approach rather than that particular 1% being repeated all over again, I believe that's great.
Yeah, yeah, exactly. And as you said, we are improving, and I think the
Oh, so much better than
whoever
the very first ones. Yeah.
watches us from the very beginning can see that we improved a lot, and that we have encountered some, let's say, progress on some kind of logics, algorithms, methods, and so on, and we are keep using them. So as I said earlier, for example, the hysteresis logic, or even the visuals, as we have built another and another one, we saw some improvements regarding UX and visuals, and now we are improving that as well. So for everybody to be as simple as it can to use the indicator to understand it. So that was some kind of the main idea when we begin this journey, to say so. We wanted for the community to understand what we are building, and to, in the end, the community to take that indicator, to take that strategy, and to improve it, and, as you know, to share with everyone, and so that it creates like a snowball for everybody, which is great, and the main idea of this community. So yeah, that's why I think I I was so welcomed, and
Hmm.
felt so fast inside this. So yeah.
Hmm. Yeah, I mean, it took us years to get like, I don't know, close to 1,000% results or anything like that. And we pretty much, I mean, you pretty much made it possible, Yuri, with your newest indicators in like 1 month or 2 months. So yeah, definitely excited for the future. And I suppose everybody else, I mean, again, we are pretty much discovering a whole different field of engineering and mathematical concepts. And amazing, amazing job.
Thank you, everyone.
Thank you. All right. I suppose that's pretty much it, guys, with the main topics for today. I would like to do as well a short performance update. If you have any questions about David Tech, feel free to leave them in the comments, either on the YouTube or inside Discord. So, as you might be familiar, we are pretty much in the top copy traders and the top traders inside the exchanges. We have been also notified that some of our traders are in the top 1%. For example, Fishing, he is in the top 1.3%. And he also has launched a dashboard, which is called trade-harbor.com.au, on which you can link your API keys and have a proper dashboard into following your account evolution. Also, there are some challenges on which you can join as well. You can create your own challenge. For example, we do have When Moon, Read, hello, if you're watching, my friend, and also Fishing. You can track their portfolios. Also, Reed, he's been doing great lately in the copy trading areas. I mean, congratulations to you, my friend. You definitely have diamond hands, achieving such results in such short time. Congratulations. And yeah, also, please check out Trigger.trade, your reliable David Tech strategies connector to various exchanges. Um, and that's pretty much it, guys, for today. Let me check if there is any questions inside the live stream. If not, I would like to definitely wish you a very good day. And also the 20 people watching over X and YouTube, this is the Discord link if you wish to join and be part of these meetings. It's free pretty much every day, Monday to Thursday at a similar time. Are the trigger trade issues resolved? I believe William is working hard with everybody which is sending any bugs or logs or anything like that. And yeah, so far as I'm aware, the trigger trade is working 100%. Let me check again if there is any question. Thank you. Thank you for checking it out. All right. I guess that's pretty much it, guys, for today. Thank you very much for joining us. I'll see you tomorrow with the edit backtesters summits that happened in the previous week. And yeah, I also have some updates regarding to the refresh for tomorrow. Thank you very much for being here, and I'll see you tomorrow. Goodbye.
Goodbye, everyone. Thank you.